Netflix's outlook for 2026 disappointed investors Tuesday as the company said it continues to fight to acquire Warner Brothers' film and TV business. Ahead of earnings, Lightshed Partners analyst Rich Greenfield told me it was key whether Netflix is approaching the deal from an offensive or defensive position.
Is Netflix doing the transaction? Meaning, are they bidding for Warner out of a position of weakness? Like, is engagement stagnating? Are they having trouble driving engagement and driving more subscriber growth and revenue without Warner? And is this sort of a defensive move, or is Netflix crushing it?
So for more on Netflix, I want to bring in Robert Fishman, MoffettNathanson senior analyst. And Robert, I'm curious how, now that we've got the numbers, that question was posed before we got the numbers. Do you think that this bid for Warner Brothers is an offensive or defensive position for Netflix?
Great. Thank you for having me. So I think what's clear from the results and where the investor debate is right now, whether or not offensive, defensive, I think it's the truth is it's probably a little bit of both. And the reality is Netflix business is a very strong business. When you think about the levels that they're at, 325 million subscribers now, which were a little bit lower than we thought, but at the same time disclosing that data point, showing how large of a base and global scale that they still have, how fast they continue to grow. So fourth quarter results were strong. And thinking about the guidance for 26, that's what investors are debating in real time now, because the top line revenue growth usually starts out a little bit more conservative. The range of 12 to 14% reported revenue growth, we were at 13% going into it, so that came in essentially in line. On the margin front, that's where some of this posturing could come in as it relates to the Warner Brothers deal, and whether or not Netflix is looking to accelerate its content spending to help show how strong of a platform they have and the ability to really invest behind it. So we would argue that the margins will likely end up even better than what they're talking to right now.
Robert, how much does Warner Brothers do for Netflix from a content slate perspective and from a revenue driving perspective?
So it has a significant potential to accelerate and add on to the core strength of the Netflix business when thinking about all of the assets that Warner Brothers comes to play. Part of the reason why we upgraded at the beginning of last year, Warner Brothers Discovery, was essentially that untapped value of all of the assets that they have, starting with the Warner Brothers catalog and library, all of the amazing IP that they have, both on the television side and theatrical. And then you have to add in HBO and all of the premium branded content there, along with the HBO Max platform. So there's a lot of great stuff that Warner Brothers brings, which is obviously why we're at the price that we are now, that Netflix just amended their offer yesterday for the all-cash deal. We are still expecting Paramount Skydance to come in with a higher bid, and we'll learn the results of the tender offer, within the next couple of days, probably.
And Robert, that 325 million paid monthly memberships that Netflix reported, how close to peak do you think that is? How much more runway do you think they have, both in the U.S. and internationally?
Right. So again, giving us the data point at 325 million subscribers, clearly a step down from the record growth and very elevated levels of growth coming out of COVID. But at the same time, they still grew over 23 million subscribers last year in 25. And we, to answer the question, think that there's a lot more runway to go. Clearly, different regions and territories have different levels of penetration. And while we don't have the breakdown of all the different regions, I think it's fair to assume that there's still a tremendous amount of potential and faster subscriber growth coming in some of the more developing regions like APAC and even Latin America.
And just to make sure I understand you correctly, when you talked about the margins and the sort of content spend, if Netflix does finally succeed in buying the film and TV business of Warner Brothers Discovery, Do they sort of lean into that, or do they still make new content at the same cadence? What do you think that will look like?
So they will have access to clearly a much larger content spending budget. And we think that over the long term, there's clear opportunities that will come out of that in terms of either refocusing some of the content spending. Probably what we've been talking about for a while is the importance of sports content and other live premium content that they can add on to their platform to help drive that advertising revenue that much quicker. So that's one area of opportunity of reshifting some of the existing content spending that they already have. But thinking about the combined Warner Brothers content spend with Netflix, it's a pretty powerful content engine, both on the premium side and all of the vast quantity and breadth that Netflix content brings to the table. So we do think that there are some pretty meaningful efficiencies for that over the long term.
Robert, good to see you. Thanks a lot.
Thanks for having me.